In June of 2022, I was interviewed at Buffalo State College by Lori Kaiser to explain the growing popularity of cryptocurrency. A lot has transpired since June. As a matter of fact, in 2023, Bitcoin has gone from a low of about 15,000 to where it's at currently around 30,000, the best asset class in 2023 with regards to capital gains. I'm going to revisit this article that I spoke about in 2022 with maybe even a little bit of commentary. So in 2009, on the heels of the Great Recession, Bitcoin entered the financial landscape, touted as a decentralized digital technology that rivaled gold. It had a value that was scarce, durable, divisible, transactable, portable, and fungible, all the characteristics of money. Today, thousands of other cryptocurrencies and digital products have joined Bitcoin as a new blockchain technology. Many financial experts expect them to dwarf the technological revolution of the internet ushered in during the late 1990s. Despite its growing popularity and increased use, cryptocurrency is still a mystery to many people. Myself, Curtis Haynes Jr., professor at Buffalo State College of Economics and Finance, I've taught a course on cryptocurrencies. The title of the course was Cryptocurrencies, Blockchains, and the Global Economy. And in this interview in June of 2022, I was shared my knowledge about digital currency in this burgeoning industry. So first, how does it work? So Bitcoin is a decentralized digital currency and currently is considered more so an asset store of value. The first Genesis block was mined by Satoshi Nakamoto, a name widely believed to be a pseudonym for a person whose true identity remains unknown, or for a group of people. All the Bitcoin created since 2009 has been processed by a growing network of increasingly powerful computers that record each and every transaction on a transparent, distributed ledger called the blockchain. The method of processing is called mining, and miners earn Bitcoin when their computers find correct numerical values. There is a lot of capital and there's a lot of labor and resources going into solving the mathematical problems. And there's also increased government and regulatory interest in the United States and across the planet. Importantly, Bitcoin has a fixed supply that will reach its limit of 21 million by the year 2140. So what makes Bitcoin attractive? Bitcoin can be traded 24/7. It moves around the world faster than the speed of light and facilitates millions of transactions at the same time. Bitcoin is unique among cryptocurrencies in its fixed supply that is infinitely divisible. Because of its technology, it cannot be manipulated by any authority figure such as a bank, government, or corporate interest. Globally, there is a huge unbanked population who does not have access to traditional banks. Through crypto, if individuals have a phone and an internet connection, they can, at a minimal cost, transfer money, make trades, and move or store monetary value. Also, because we're in what is considered an early adoption period, there is a lot of volatility, which is a function of speculation and short-term trading interests. But the field also has a potential for lucrative returns for buy and hold value investors as adaptation increases. In the United States, we can look at Bitcoin and other forms of crypto as a speculative asset. But for many of the so-called third world countries with weak economies and weak currencies, this type of currency could be a game changer. The idea of a decentralized fixed supply asset that has all the characteristics of money, yet is not controlled by Western banks and international organizations such as the World Bank and International Monetary Fund, is receiving a lot of interest and a lot of study. At the time of this interview, El Salvador, which has such a weak currency that it uses dollars, had added Bitcoin as a legal tender. And the world is watching that particular play. How big a player is cryptocurrency in the financial arena? The crypto market is not yet a big financial player. The market currently has a market cap of 1 trillion. At the time of the interview, it was 2 trillion, with Bitcoin being 50% of that. 50% of the 2 trillion in 2022, 50% of the 1 trillion in 2023. In comparison to gold, which is oftentimes compared, gold's market cap is 10 trillion. There are about 300 million global users, and these numbers are minuscule compared with the $450 trillion in global financial assets and a world population of 8 billion. However, especially since 2020, there has been a huge increase in institutional adoption. As technology, energy efficiency, and government regulations get hashed out, it appears that the upside potential is huge. While there are no guarantees, the industry has shown significant resiliency. One country's ban can lead to another country's opportunity. For example, the Bitcoin mining that was banned in China has moved to other countries, with a significant amount of mining moving to the United States and to Canada. Can people become rich from it? Anecdotally, until this latest bear market, and again, today in 2023, that bear market looks like it's turning into a bull market, with the Wall Street boys getting ready to get in, right? Those who manage the accounts for sophisticated investors with deep pockets, they expect to get in within the next few months. So at the time of this interview, it was a bear market. And it affected just about all financial assets, whether it was real estate, whether it was stocks, whether it was cryptocurrencies. But I did hear from a few students and alumni who've made tens of thousands to hundreds of thousands of dollars from speculating in cryptocurrencies. Empirically, since its inception, Bitcoin, until its latest pullback, has outperformed gold in the S&P index. And again, and then we're coming back to the present, in 2023, Bitcoin has gone from 15,000 to 30,000 from the January 1st to today on this recording, which is in late October of 2023. And it's the best performing asset of the year. So it's outperforming all other benchmarks. Many say that they entered the crypto and Bitcoin markets because they saw the potential of huge speculative gains. They stayed because they did their research and have found value in the industry. And just like old school value investors such as Charles Munger and Warren Buffett, who advise people to find something of value and hold on to it for a lifetime, the Bitcoin dieharders have found value in Bitcoin in the industry and plan to buy and hold. What is the future of cryptocurrency in light of the recent collapse of market value? So this collapse at the time of this interview was Bitcoin had dropped from around $70,000 to probably at this time of the interview, it might have been about $40,000, $50,000. It bottomed out at the end of 2022 at about $15,000. The people have asked from its inception, is Bitcoin and cryptocurrencies, is it a Ponzi scheme to be avoided, or is there real value being created in these new digital spaces? So in spite of the current 70% drop in price from its height in November of 2021, but remember, coming back to today, the 100% increase from its low of January of 2023. Data shows that Bitcoin is experiencing increased adoption, especially in small denominations or fractions of Bitcoins called Satoshis. In the update, right, the big sophisticated investors with deep pockets, what's often called whales, The percentage of the whales is increasing significantly in the Bitcoin market also. So, even as the weak hands leave the market, the fundamentals suggest that Bitcoin and other cryptos are being mainstreamed at an increasing rate and still have value as a cutting-edge 21st century technology. These new industries are the darlings of the millennials and the Gen Zers who have come of age during the digital revolution. And now, again, jumping back to 2023, is about to become the darlings of Wall Street. The shift to this type of technology is part of a paradigm shift, responding to monumental changes in society, including the Black Lives Matter movement, the Me Too movement, and the Donald Trump and Bernie Sanders popularism. The actions taking place in this economic space remind me of the 2001 dot-com collapse when most internet businesses went under. This is in line with the standard equation of 90% of startups fail within the first year, while another 70% fail within years 2 through 5. This is new territory, and no one can really fathom the long-term consequences, nor be sure of the winners and losers. But the principles of market supply and demand are still relevant. What is especially unique about Bitcoin is that its long-term supply is fixed and verifiable. It is perfectly scarce. People should do their homework and learn why this is important, and from their research make sound financial decisions according to their own risk tolerance. The global pandemic of 2020 has put us on notice. There is no turning back. Many of the rules of the industrial age and the 20th century capitalism are being challenged, especially here in the West. As they say, strap on, strap in, and hold on to your hats. We are in for one heck of a ride. Peace.